It really hurts when you get stopped out before you thought the market then finally goes into your predicted direction. There is a big and huge entities behind the market. For example, the commercial banks. These guys, they create 80% of the market volume. So they know exactly how to bait you and I as a retailer traders into buying and selling exactly at the wrong time. They see way too behind the curtain as they are dealing with huge orders. That's why the market is structured so as to they cannot trade against themselves. In today's video, I'm going to show you exactly how you can plot or mark your structure so as to you can know exactly the structure of the market you are trading to. This is going to help you save a lot of bad trades. Without much ado, let's dive into the video. The 4-hour time frame is the best time frame for you to mark out your market structure perfectly. From that high to the lowest low at this point, we are considering the volume and momentum which the market created. Okay, let's mark that point, and also let's mark the lowest low. Next, we want to see a low lower than this. You see, this is what we call break of structure. At this point, this candle came rejected. It didn't close. The next candle, you see, the one with the body closing below the wick, the extremity of that low which the market created at that point. Okay, this 4-hour candle which closed with the body is the one which broke the structure to the downside. Okay, now we have found another new low. When the market create that low here, it retraces all the way to that point. Okay, that was the lowest high which the market created before it finally broke structure to the downside. Let's highlight this low. We'll also highlight, so you see, we have the first structure which was created, we have another structure which was created. Next, immediately this new low was created. Now we want to see another new candle closing below, the 4-hour candle closing below our new low which was created at this point, and which was here. This is what we call break of structure, because that candle closes fully below the wick of the previous structure. Remember, we have this candle which came, it traded, but what? Rejected. That's not a break of structure. The next one also came, traded, and rejected. That's not a break of structure. For you to say a break of structure, then you must have to see that a candle has closed below the extremity of the previous structure. And here we already found that. Okay, so this was the lowest low before it made a retracement to the upside. So now let's measure. This is our previous structure retracement. You see, this was the lowest high which was created before the new low. You see, so this distance from here to here, we consider it as what? The volume and the momentum. Okay, now you see we've got 1, 2. This is the third structure the market has created. You see, here's the new low which was created. Now this new low which was created got broke at this level. You see, this 4-hour candle closes below. Hence, we can say a structure has been broken to the downside. Okay. Then, we also take into consideration the volume and momentum. When this new low was created, it then retraces. If we consider this movement from here to here in terms of volume and momentum, then we can put our reference point here. So you see, this is what we call structure. You see the first structure, the second structure, the third and the fourth structure. Hence, we say this market is in a downtrending market. where price form a series of lower lows, lower highs, lower lows, lower high, lower low, lower high, lower low. Hence we say the market is a bearish market. Just a quick reminder, if you find this video useful, if this video is of any help to you, like and subscribe. By so doing, it will help grow the community. Subscribe now. What are you waiting for? Just subscribe. Secondly, take a look at this point. Price then retraces. After it created this low to the downside, price then retraces all the way to the up. We then mark it as what? The volume and momentum it takes to travel all the way to this point. Okay, that's where you are seeing V and M, which represent what? The volume and the momentum it takes for the price to retraces all the way from this newly created low to the newly created high. Okay, thereby breaking this structure. Hence, we can say at this point, structure is being what? Broken. Because the next 4-hour candle which we created at that point closed fully above our structure. Hence, immediately that one happens, we can now say what? There has been shift in market structure. Immediately this new high was created, let's mark that point. So we have another structure, you see, from this lowest low to this highest high. Okay, now where the market retraces, it retraces all the way to the downside. Where was the lowest low? Here. Before it finally creates another new structure higher than this high. Let's mark this. So at this point in time, price has already broke structure. Why? Simply because the candle has closed, the 4-hour candle closes above the previous structure which was created. You see, watch carefully. You see that 4-hour candle, you see how it closes. You see, it closes above our previous structure. Hence, we can say, yeah, a structure has been broken. Now, where the market retraces, the lowest low, that is at this point, all the way to the new found high which was created at that point, is said to be another structure. You see, now we have this structure, which what gives us what? Shift in market structure. That is from what? Downtrend to an uptrend. Okay. So this is how you can mark out your structures. Now immediately this new high was created, it retraces back, okay, from where it retraces to where it created another new high. Let's mark it. So that is the volume and momentum you see the price takes in order to what? Create this new high. Hence, breaking structure at this point. Okay. Immediately that happened, we mark it out. We have the previous structure which was created. This is another newly found structure. Okay. Next, the price then retraces and created this lowest low and traded all the way to this side. Okay. Thereby breaking the previous structure which was newly created. If you can see here, this candle, this 4-hour candle breaks this structure by closing fully above it. So now, let's mark this level as our structure and this high. So take a look. As price shifts from downtrend to an uptrend, take a look at the volume and the momentum. You see, from here to here, from here to here, from here to here, from here to here, you can see that there is an what? Increase in volume and momentum as price shift from a downtrend into a what? An uptrend. Okay. This is important because it can help you know exactly which structure of the market you are trading. Immediately this new high was created at this point, the market then retraces all the way back. Okay, where it retraces, let's mark our level here. This was the structure you see. So can you say this structure was broke to the downside? No, because all the 4-hour candles which came, they traded into that structure and what? Rejected. None of them closes below. Hence, we cannot call it what? A break of structure. Instead, we can say what? Structure has what? Retained. You see, structure got retained. Okay, which means price came back into this structure and bounced up again. Also, at this point, if you notice, structure got broke to the upside. Why? Simply because the 4-hour candle, as you can see, it closes fully above our previous structure. Okay, hence we say a break of structure to the upside, and price then retraces. As it retraces, this was a very deep retracement. Take a look. At this point in time, let's extend this guy. Now at this point in time, you see the 4-hour candle which closes below our structure, then we can now say what? Structure has been broken. For the first time it came, it retains and bounce up. So now at this point in time now, we can now say what? Structure has been broken, a break of structure to the downside. If the market has already break structure at this point, there has now been what? Shift in market structure. You see, from this highest high which the market created to the lowest low at this point, market has already changed. Okay, so take a look. You see the distance from here to here in terms of volume and momentum is a very huge structure which the market created, thereby what? Giving us shift in market structure. Okay, and immediately price created this lowest low, it then retraces back. As it came back into this level, take a look. What happened? It fails to break structure. Instead, what happens? It retains and bounce up again. If you notice carefully here, the 4-hour candle which came, it traded into our structure and what? Bounces back. Hence, we can say structure has retained from this level. It hasn't yet broken. Okay, and this one becomes, this was the highest point where it retraces. It came back into our structure. It never broke our structure. Okay, also from this highest point, we want to see whether if price can retain or it can break to the upside. So if you notice, price came. For the second time when it came, it bounced down. For the third time, it is also heading its way to the downside, thereby what? Creating a new structure to the downside. This is how you can mark your structure. So these are what we call structures. 1, 2, 3, 4. You see, 4 structures in this downtrend. In the uptrend, how many structure was created? 1, 2, 3. You see, this is another newly trend which is about to form. Price has created the first structure. Now we are about to wait for either this one to break to the upside or this one to break to the downside. But if it doesn't break, it can still retain and bounces back, thereby creating what? A range in market. That's how you can go about marking out your structure using the 4-hour time frame, so as to you can know exactly which structure of the market you are trading. Make sure you like and subscribe for more videos like this, and don't forget to give this video a thumbs up as it helps to grow the community.